The Fed just made their decision today, Wednesday, March 18th, 2026, and if you're retired or close to it, you need to hear this right now. Hi, my name is Jeff Wright. I'm president of Fish Creek Capital, an investment management firm here in Birmingham, Alabama, where we love to help long-term investors with building dividend growth portfolios for cash flow, especially for their retirement needs. Let's talk about what happened today. The Federal Reserve just wrapped up their March meeting and voted to hold interest rates steady, unchanged for the second meeting in a row. Rates will remain between 3.5 and 3.75%. So basically, no cut, no hike. They're just sitting tight. Why? Two big reasons. The first one, inflation is still sticky according to the Fed. Powell said the Fed is making progress on inflation, but not as much as they had hoped. Second, there's a new wild card nobody saw coming a year ago, and of course, it's the war with Iran. It's cut off nearly all oil from the Persian Gulf, sending energy prices sharply higher, and that threatens to push inflation even further just because oil is in everything. So what did Powell say? Powell stepped to the mic around 1:30 Central Time this afternoon. He pointed to a series of back-to-back shocks. The pandemic, which he was going way back, tariffs, and now this energy shock with the Iran war. He warned that this kind of thing can cause real trouble for inflation expectations. I talked about stagflation on another video where inflation is going up, but growth is going down. He also made it clear the Fed is not on a preset course, and they'll make decisions meeting by meeting. So the translation is, don't expect a rate cut anytime soon. So the other part that we got out of the meeting today was the dot plot. Here's the number that really matters. The Fed's dot plot, that's their internal forecast, still calls for just one rate cut in all of 2026 and then one cut in 2027. And their inflation outlook actually got worse. They now project inflation at 2.7% this year, up from their December estimate of 2.5%. Now, that's a Kiplinger article. You know, everything's doom and gloom, 2.7 to 2.5. I don't know if that's as worse as they're trying to make it sound. The market did not like what it heard today, though. The Dow and the NASDAQ and the S&P were already down after Powell's comments. The Dow ended up closing down more than 700 points. The S&P 500 and the NASDAQ each fell over 1%. Investors were hoping for more optimism, and they didn't get it from Powell this afternoon. So what does this mean if you're retired and living on a fixed income or even a dividend portfolio, which is what we love here at Fish Creek Capital? A few things. First, higher for longer rates actually help dividend investors right now. Savings account, money markets, and short-term bonds are still paying decent yields. Dividend growth is excellent because we're focused on cash flowing companies that are growing their earnings and growing their dividend through growing earnings, which actually increases your cash flow. Second, if you're in dividend stocks, don't panic on a down market day like today. Just like I said, your dividends still pay regardless of what Powell says, which is very, very important to remember and a big deal when it comes to retirement and your cash flow. Number 3, watch energy and watch it closely. You can tell even by the price of gas. You can also go to CNBC.com and pull up crude oil. You'll see it even at the top of their website, and that will also tell you a lot about even the market. Crude oil goes up, stock markets generally go down. Crude oil goes up, inflation can be higher. Crude oil goes down, inflation can be lower. And you can often see that even day to day at the gas pump. We want the Iran war basically to stop as soon as possible. That's going to help bring everything back down and regulate the oil market and take away the unknown of how long the war is going to last. Unknowns are terrible for the stock market. One more thing Powell said that the news people are all talking about is when asked if a rate hike was possible, he said, "We are prepared to do what needs to be done." That's Fed speak for nothing is off the table. And of course, we don't want that. The one thing that's still out there as a card is the new Fed Chairman Warsh that will take over in June, assuming he gets approved and goes through the appointment process. He'll take over in June and replace Powell, and we know that Trump wants rates lowered. He has made that very clear and has talked about that a ton with too late Powell, and so we've got the new Fed chair coming in, and I would expect rates to come down just because of the political pressure that will be there. So don't forget that, but that's not until June. Okay, that kind of wraps up the Fed conversation today. If you have any questions, if you're worried about inflation, if you're seeing higher prices, put it in the comment below what you're seeing in your local town, in your grocery store, at your gas pump. I'd love to hear what you think about the war and how it might impact inflation and your prices. Also, please like and subscribe. That always helps. And let me know what other information can help you in your retirement journey. Again, this is Jeff Wright with Fish Creek Capital. Thank you for watching.